Hello everyone, welcome to Edutap and welcome to the Finance 360-degree sessions where we cover all the relevant and important finance current affairs and the RBI notifications which are important from your exam point of view. Let it be the RBI Grade B, the NABARD Grade A or SEBI Grade A. Okay, and in today's session we are going to cover two very important news articles. The first one is regarding the Rural Development Ministry, that is the Ministry of Rural Development, and the SBI. They have signed a pact to facilitate the loans for the self-help groups. So which category will be covered and what is this pact that has been signed, how it is related to the Swayam Sidh, all of this we are going to discuss in today's session. The second news article is regarding the IRDAI, that has eased the norms for investment in the infrastructure debt funds. So what is this infrastructure debt funds? A few days ago also we have discussed about the infrastructure debt funds, as the Reserve Bank of India has modified the norms for the infrastructure debt funds. Now what the IRDAI is saying about the infrastructure debt fund, that we are going to discuss in today's session. So in today's session you will have the complete clarity about the infrastructure debt fund and the MOU that has been signed. Now do tell me that I am clearly audible. Like, is there any problem that is coming in my voice? Am I clearly audible? Am I clearly visible? So give me a thumbs up. Good morning, Pratul. Good morning. So give me a thumbs up if I am clearly audible and visible. Now, before starting with the session, do subscribe to the YouTube channel so that you continue getting such informative sessions, and join our Telegram channel for the PDF of this session. And the PDF of this session you will get in the Telegram channel. The link for the Telegram channel you have got in the description box below. Good morning, Aditi. Okay, thank you, Pratul and Tushar. Thank you, Aditi. So now, starting with the session, IRDAI, that is the Insurance Regulatory and Development Authority of India, it has released a circular on 5th January 2024 regarding the infrastructure debt funds NBFC. Okay, so IRDAI has actually relaxed certain norms on investment in IDF NBFCs, that is infrastructure debt fund NBFCs. So what are these infrastructure debt fund NBFCs, that we will understand. So the norms have been relaxed by the IRDAI regarding the IDF NBFCs by insurance, like the investment that the insurance companies do in the IDF NBFCs, that norms have been relaxed. So we are going to understand that what are the norms, but before that let's understand that what is the IDF NBFCs, because this is very important. So IDF, that is the infrastructure debt fund. You can understand that it is related to the infrastructure, it is related to providing debt for the infrastructure, so it is an infrastructure debt fund. Okay, so an IDF is set up either as a trust, that is as a mutual fund, or it is set up as a company. Okay, if it is set up as a trust based IDF, it is registered as an IDF mutual fund which pools in the money and which invests the money in the eligible securities. And it is regulated by SEBI, that is the Securities and Exchange Board of India. Whereas a company based IDF is registered as a NBFC, as a IDF NBFC, and it is regulated by the Reserve Bank of India. So the IRDAI has relaxed the certain norms on investment in the IDF NBFCs by the insurance companies. If the insurance companies are doing investment in the IDF NBFCs, you have to understand that the IRDAI, it is the Insurance Regulatory and Development Authority of India. So for sure it is going to make rules and regulations for the insurance companies only. Okay, coming back to the IDF NBFCs. Now let's understand about this IDF NBFC. So IDF NBFC means a non-deposit taking NBFC. So NBFCs are of two types. Broadly, it is deposit taking, that can take the deposits from the public, and NBFCs are also non-deposit taking, that cannot take the deposits from the public. Okay, so the IDF NBFC should be a non-deposit taking NBFC. Okay, non-deposit taking NBFC, they pool in the fund through various means. Okay, now they are permitted. The IDF NBFC, what does it do? They are permitted to refinance the post-commencement operations date infrastructure projects that have completed at least 1 year of satisfactory commercial operations. So what does this mean? Let's say that National Highway Authority of India is making a flyover, okay, or is making a national highway. New national highway has been constructed. Now for this construction of the national highway, the NHAI has taken a loan, and like it is a PPP, that is, it is a public-private partnership. Under the public-private partnership, the national highway is being constructed, or there is some construction infrastructure that is going to be constructed. So here the public-private partnership for the national highway, the bank has given the loan for 30 years. For the 30 years, the bank has given a loan. Okay, for 30 years, the loan has to be repaid. Now, the bank has given this loan. This is the financing that the bank has done for the construction of this national highway. So the IDF NBFCs, they can refinance post commencement operation date infrastructure projects. So now this national highway has started working. The national highway has been opened up for the public, for the people. So this national highway has started operation. Okay, so that is post commencement operation date infrastructure projects can be refinanced by the IDF NBFC if these projects are running for they have at least completed 1 year of satisfactory commercial operation. That means they have been opened up for at least 1 year. So this is the idea, that after this criteria is satisfied, that the infrastructure project has been working for 1 year, then the IDF NBFCs can take this. Let's say 5 years has completed. It took 5 years for the construction of the national highway, including the 1 year of the national highway being opened for the public. So after that, the IDF NBFCs, they can refinance this loan. Okay, they will say to the bank that, okay, the bank do not want to keep this loan for a long period of time. Now the bank has found some new opportunity in which the bank can lend. So the bank do not want to keep this loan for 25 more years. So the bank is selling this loan to the IDF NBFCs, and now the IDF NBFCs, they are refinancing. They have actually, so bank has financed the loan. Now the IDF NBFCs, they are refinancing the post commencement operation date infrastructure project which has completed at least 1 year of satisfactory operation. So this is the task of the IDF NBFCs to refinance the lending for the infrastructure projects, so that the banks have more money. Okay, so banks will get the money back, and the banks will lend it for further infrastructure projects, or for further cases the banks will keep on lending. So it frees up the money with the banks, and the banks can do the verification and everything and can lend to further projects. So this is the idea for the IDF NBFCs. They refinance the loan. Second one is regarding the finance toll operate. So the IDF NBFCs, they can also finance the toll operate transfer projects as the direct lender. So I hope you know that the tolls, there in the national highways, there are tolls that are set up. From the tolls, the money is collected. Okay, so in a TOT model, that is the toll operate transfer. The toll operation, now the national highway is under the NHI, that is the National Highway Authority of India. So the national highway is under the NHI. Now the NHI does not want to collect the toll, okay, because it requires a lot of people, it is very hectic, and the NHI does not have that much of the capacity to collect the tolls from all over the country. So now the NHI is doing the toll operate transfer project. That means the toll operations will be transferred to some third party. So that is the toll operate transfer model. The right of collection and appropriation of fees for the selected operational national highway projects constructed through public funding shall be assigned for a predetermined concession period. Let's say for 30 crore, for 30 years, the toll operations have been transferred to a private entity, to some developers or the investors, against upfront payment of a lump sum amount to the NHI, that is 30 crore. So for 30 crore, the NHI has transferred the toll operation to some developer or some investor, okay, for the predetermined concession period of, let's say, 30 years. Now how the company or the investors are going to get this 30 crore? So it can be financed by the IDF NBFC. So IDF NBFC are able to finance the toll operate transfer projects as the direct lender. They can directly lend to the investor or developer that want to have the toll operations under them. Okay, so toll TOT, what is this? Government has approved the proposal to authorize the NHI and HAI to monetize the public funded national highway projects which are operational and are generating toll revenues for at least 2 years. It can be transferred toll operate transfer can happen under this. Okay, so this is the idea. This is the idea of NBFCs. Okay, I have taken a complete session on the idea of NBFCs, their asset size and everything, so that you can see. Okay, it was released in September 6, 2023. So you can see this session to have the complete clarity about the idea of NBFCs. So the IRDAI has relaxed certain norms on investment in infrastructure debt funds of NBFCs by insurance companies. Previously, what used to happen that the insurers, they were permitted to invest in IDFs. They were permitted to invest in the insurance debt, in the infrastructure debt funds that were backed by the central government as approved by the IRDAI on a case-by-case basis. So the insurance companies, they used to invest in the IDFs that were backed by the central government on the case-to-case basis as approved by the IRDAI. Now the IRDAI is saying that you do not need to get the approval from the IRDAI on the case-by-case basis. So previously insurers, that is the insurance companies, they were permitted to invest in the IDFs, in the infrastructure debt funds, NBFC, backed by the central government as approved by the IRDAI on a case-by-case basis. Every IDF NBFC was being checked by the IRDAI, and then they were being provided with the approval that okay, on this IDF NBFC the insurance company can invest, and this was reckoned and this was considered as an investment in infrastructure by the insurance company. So to encourage further investments by the insurers in the infrastructure sector, in the infrastructure debt fund NBFCs, and to increase the ease of doing business, the regulator has done away with the requirement of case-to-case approval for the infrastructure debt fund NBFC. Okay, this is why the IRDAI is doing this. This is in the wake of the RBI's decision to enable the IDF NBFCs to play a greater role in financing the infrastructure sector. That's why the RBI had released the previous guidelines in September 2023. So you can understand that these guidelines are again in news, that because the RBI has relaxed the norms, because the RBI wants the idea of NBFCs to play a greater role in financing the infrastructure sector, that's why the IRDAI is also relaxing the norms. Now the insurance companies do not need to take the approval from the IRDAI on a case-to-case basis to invest in an IDF NBFC. Okay, this is the idea. Now insurance companies are allowed to make investment in IDF NBFCs which will be reckoned as infrastructure investment. So if they are investing in IDF NBFC, it will be considered as an investment in the infrastructure, subject to the following conditions: that the IDF NBFC is registered with the RBI, it is registered with the Reserve Bank of India, debt securities shall have the residual tenure of not less than 5 years. So the debt securities or the debt that is being purchased from the banks and such by the IDF NBFCs, so these debt security shall have residual tenure of not less than 5 years. Okay, minimum credit rating of A or its equivalent by a credit rating agency that is registered with the SEBI to be eligible for approved investments. So you can understand that the IDF NBFC that has a minimum credit rating of A or its equivalent by a credit rating agency that is authorized or registered with SEBI, that will be considered the approved investment. So these are some criterias. If these criterias are being followed by the IDF NBFCs, then there is no need for case by case approval from the IRDAI. So this is what the IRDAI has said. Now coming to the second news article, that is the Rural Development Ministry, that is the Ministry of Rural Development and the State Bank of India. They have signed a MOU, Memorandum of Understanding, to facilitate the enterprise financing, to facilitate the women entrepreneurs of the rural self-help groups. Okay, for the rural self-help groups, women, this kind of MOU has been signed. The State Bank of India has introduced a specialized financial product, that is Swayam Siddh, that is exclusively tailored, that is exclusively providing the loans up to 5 lakhs for the self-help group women entrepreneurs. Okay, so this is the Swayam Siddh that has been launched specifically for the women, for the self-help group women entrepreneurs that are seeking the loan up to 5 lakhs. So this is the MOU that has been signed between the Ministry of Rural Development, so Deen Dayal Antyodaya Yojana, National Rural Livelihood Mission, that is under the Ministry of Rural Development. This and the State Bank of India has came together for this MOU. This MOU is helping. This MOU aims to facilitate enterprise financing for the rural self-help group women that are under the bank's Swayam Siddh initiative also. Okay, so by providing the women entrepreneurs that are seeking the loans up to 5 lakhs, the money that they need. Okay, this initiative is designed to alleviate the challenges. This initiative is designed to relax the challenges associated with extensive documentation that is required for bank loan applications and the reduce the turnaround time of clearing the loan. So you can understand that this is the Swayam Siddh initiative that is providing, that is exclusively tailored for the self-help group women entrepreneurs seeking loans up to 5 lakhs. So this is going to reduce the challenges that is being faced by the women entrepreneurs in the rural areas, as they are going to get easy loan and faster loan from the SBI under the Swayam Siddh initiative. So it does away with the requirement of the burdensome documents like quotations and detailed project reports and such, allowing an easy application process where a simple loan application with the KYC details can be submitted at local SBI bank branches. So this has made the loan process very easier for the rural self-help group women entrepreneurs. Okay, so DAY NRLM, that is the Deen Dayal Antyodaya Yojana National Rural Livelihood Mission. This will facilitate the loan application process, because the self-help group women, when many of the women entrepreneurs, they do not have the awareness that how to do the KYC or how to provide the simple application also. So the dedicated field cadre under the Deen Dayal Antyodaya Yojana NRLM, so the dedicated field cadre are going to help the loan application process, and they will oversee the loan repayment through. So under this scheme, the dedicated field cadre is going to see that the loan application process is completed smoothly, as well as they will oversee that the loan repayment is happening on timely basis. If the loan repayment, any problem is coming in the loan repayment, so why the problem is coming? That's why the SBI and the Deen Dayal Antyodaya Yojana NRLM, they have signed a MOU. So this Deen Dayal Antyodaya Yojana is under the MORD, that is the Ministry of Rural Development. Okay, so this is the idea. DAY NRLM, remember, it will facilitate the loan application process and it will oversee the loan repayment through its dedicated field cadre. And I hope you have the basic understanding about the Deen Dayal Antyodaya Yojana NRLM. A session has been made by Diksha ma'am. If you have any confusion regarding this scheme, you can see that session. But the basic idea is that this scheme is working for the rural areas. Okay, this scheme is working for providing the livelihoods to the rural areas. Okay, so creating efficient and effective institutional platforms for the rural poor, enabling them to increase the household income through sustainable livelihoods, enhancements and improved access to financial services. So this is the idea of the Deen Dayal Antyodaya Yojana NRLM, and here you can understand that the financial services for this, the NRLM has signed, like the MORD has signed a MOU with the SBI. Okay. So a training toolkit package was also launched at the event to promote the access to formal finance by the self-help group women entrepreneurs. So a training toolkit has been launched at the event. So developed in collaboration. This training toolkit is developed in collaboration with the International Finance Corporation under the World International Finance Corporation. I hope you know that there are 5 World Bank institutions in which the IBRD is there, the IDA is there, the IFC is there, the MEGA, that is the multilateral investment security something, MEGA is there, the multilateral investment guarantee agency. So then there is the court of the settlement court is there. So out of the 5 World Bank institutions, the International Finance Corporation is one of them. Okay, so International Finance Corporation under the World Bank funded National Rural Economic Transformation Project, this toolkit. So this has been developed. The training toolkit has been developed in collaboration with the IFC under the World Bank funded National Rural Economic Transformation Project. Okay, so this toolkit aims to enhance the capacities of the state rural livelihoods mission, like we have the NRLM. Similarly, for the states we have the SRLM, that is focusing in a particular state to facilitate increased access to formal finance by the SHG members for their economic enterprises. So you can understand that this toolkit is provided to ease the to provide the easier finance to the SHG women, to the entrepreneurs. Okay, so this is the whole idea. Any confusion till here? Anything that you have not understood? Saransh, you can mail at hello@edutap.co.in and the team will connect you with the faculty of government schemes. Okay, so she or he, like either the Gurkira sir will connect with you or Diksha ma'am will connect with you, and like any one of them, they will be able to tell you the proper strategy for the government schemes. Okay, so they will be better people to tell you the strategy for government schemes. Yes, Neha, I understand it. Yes. If there is anything that you have not understood, I can repeat that in Hindi. Is there anything that you want? So this is the news article. This is the first question and this is the second question. I hope you will be easily able to answer this question. So these are the people that have given the right answer of the previous session question. Nikhil, Pooja, Shibanand, Dheeraj, Shubham, Sagar, Kaushal, Navdeep, Pranav, Neetu, Devanshu, Jadu, Dinesh, Kamal Krishna, Rushi, YDV, Kingshuk, Ronak, Ankit, Priyanshu, Siddharth, Sakshi, Riya, Abhishek, Ashutosh, Tanu, Swarish, Abhay, Jhanna, Tamiz, Rahul, Gajendra, Aditi, Akash, Ankit, Ayush. So these are the students that have given the right answer of the previous session question. If you have not understood any point, you can tell me and I can repeat that in Hindi. Sometimes it becomes very difficult to switch between the languages. As well as for the students also that are not able to understand Hindi, for them also it will become a little typical if I keep on switching between the languages. Housing finance companies, yes, they are the NBFCs, but they come under the NHB also. Okay, so these are the two questions. I hope you will be able to answer these questions. Now there is a big announcement from Edutap that we have brought for you the comprehensive guidebook for RBI, NABARD and SEBI, so that through a single guidebook you are able to get many of your queries resolved. Okay, if you want to know about your syllabus, if you want to know the syllabus for the examination, the sources from where to prepare, as well as even if you want to get the previous year questions, these are provided with the guidebook. So do download this guidebook, which is absolutely free of cost. You can easily download the guidebook. The link for the guidebook is provided in the description box below. Okay, so give the right answer of the previous, give the right answer of the session. And if you have any query, you can comment down below. If you want me to repeat something in Hindi, kindly ask me during the session only. Or you can remind me that I have to switch between the language because I forget otherwise. So you can tell me in between the session that okay, then I will explain the same point in Hindi also. Okay, so that I can do. But now if you want to understand something in Hindi, you will have to tell at that point so that I can repeat, or you can tell now also if you want to understand any point, I can repeat that in Hindi. Okay. So if you have like any query, you can also mail us here or you can call us through this number. Okay, so thank you very much.